Hey guys, welcome back to Your Nifty Guy. I hope all of you are doing well. I believe all of you had a great trading Friday as well as a good weekend. So in today's video, we are first going to go over how the market actually moved on Friday, what played out, where the momentum faded, and what tells us about the current market tone. We'll look at the key zones that acted as strong supports or resistances and how price behaved around those levels. Once we understand that, we'll move on to the trade plan for Monday. I'll walk you through the important levels. I'll be watching my approach if the market opens flat, gap up, or gap down, and how I am planning to navigate the day depending on price structure. So make sure you stick around till the end. It will help you go into Monday's session with clarity and confidence. And if you enjoy these daily breakdowns, do hit that like button. Subscribe to the channel if you haven't already, and share the video with your trader friends. All right, let's get started by decoding Friday's market move and see what's it hinting at for Monday, right? So on Friday, what we had discussed was that we'll be short below this particular swing, uh, or which was also Thursday's low with a pullback. Now, market opened with a gap down of around 75 points or 75, 80 points or if I remember that, and immediately went off into a selling zone, selling spree. It took support exactly at the retest of the bigger time frame trend line, which is there. I'll quickly be going over to that as well. But then if you look closely around here, took the support, gave us the first bounce, formed a good W, right? And a very good trade. This was the first trade that I took around here was at the break of this particular high, right? So this is a good W or bottom formation. So anybody who is not aware of this setup can go and watch the video on reversal setups that I have on this channel. So this was the good bottoming out trade which I had taken personally. I entered the trade at the break of this swing high with the stop loss just below this swing line. So this pullback which came in before the market actually broke above the neckline of the W or the double bottom as we like to call it, gave us a smaller stop loss, right? Had the market come and moved up directly up above here, our entry would still have been valid, but then our stop loss would have been much bigger, right? I'm just trying to explain what goes on in my head while I am in the market. So this small down move which came in actually helped us by giving us a smaller stop loss. I entered this trade, but again, we do not enter the trade at the break of this swing high, right? We need the markets to commit to us before we commit to the market. And this being the major swing or the neckline of the double bottom, we needed markets to go above this. And as soon as markets started moving above this, this was the place where I entered into the trade, right? So Friday was a good day wherein market saw some good bullish momentum. And this is where I entered at the peak around the highs of this particular trade. The profit was somewhere around 68 points, right? I exited this particular trade in this 11:45 candle, right? The reason being, see, after the entry, the prices moved smoothly. There was nothing to worry, nothing to manage. This first uh, red bar which formed in, so this looked like a good retest of the day high breakout, as well as it being an inside bar. It signaled that if this high is taken out, the momentum could be continued. We can even look at adding more quantities, right? The next candle was a indecisive doji, and the next candle which formed was a negative candle, and it also gave us a closing below the day's high. So there are two things which could have been happened. Again, what has happened is that market again after this candle again moved upward and would have given even bigger targets, right? But then you have to manage the position that you are in as per your risk appetite, and you have to make sure that you are not gambling with your capital. So this was the reason. This is the place where I exited because there could have been another scenario which would have been a day high breakout where buyers were invited and then they would be trapped if the markets fell down, right? So although the at the peak of this particular trade, the profit was somewhere around 68, 70 odd points. I captured uh, 38 points in this particular trade, and that is completely okay, right? Some days, what would have been the scenario would have been that why did I even hold the trade if the trade started losing out on the unrealized profit which was there was had it continued the momentum because the momentum was good. And we can see, right? The markets eventually did continue higher up and around these places. We saw some very good momentum. But then, yeah, so that is the reason for trailing out your stop losses or trailing out your profits is so that number one, you don't lose out completely on a winning hand, and you keep holding your positions for longer and bigger targets. So had this scenario not come in, and after this, if this would have continued, then we would have had even much more profit in the same trade, right? So markets, nothing is absolutely certain. You have to play in terms of probability, and out here, for me, the probability of a day high breakout failure forming seemed much more probable to me, and that was the reason why I exited the trade at this particular candle. And this was the only trade for me. And once again, post this particular day high breakout, I did not want to risk what I had gained in. And for a simple reason being, we were again coming back to the previous day's low, which was there, and wanted to see the reaction around here. And then this momentum-based move came in, immediately went back, and again, this was some big ass volatility around the day's end, right? So this was the only trade that I took on Friday, right? 38 odd points captured in this particular trade, and I hope I have explained the logic of my entry as well as the logic of holding on to the trades despite seeing the profits being taken away, right? So these are the things that you need to work on extremely hard, because to see that a trade is around 70, 68, 70 odd points in profit, and then slowly those points are being taken away, but then you are holding on to the trade for the hope that this trade might continue further in your direction. If not, we trail out at a lower level, not waiting in hope, not waiting in hope that we will once again see the same amount of profits that we saw already, that we have seen already in the trade, right? So that is how it should be. It has to be mechanical. There has to be no emotions involved. It should be black or white. Either we are holding, either we are going ahead, or if we are trailing, at what level are we exiting, right? So that was it about for Friday's trade. Now, there's another thing which I wanted to show you guys. So on Friday, while we were discussing the on Thursday's video, in the Thursday's video, when we're discussing the trade plan for Friday, right? I had told you guys about an open-ended divergence, right? So just to add on to that particular info and that particular level, so that is the reason why I told you it's called an open-ended divergence. I also mentioned in that video, if on Friday the market goes below the swing low and RSI makes a new low compared to this, the divergence will not be working, right? And this is exactly what has happened. If you go and check that video out here, this was an open-ended divergence, but on Friday the markets moved well below this particular level, and RSI also formed a lower low, right? So the open-ended divergence has gone. And that is the reason why I always tell you that RSI is a good indicator, very good indicator, but then first priority uh, is to be given to the price itself, right? RSI is only for your confirmations and your biases and for seeing the divergences, but then the first priority always has to be given to how the price is moving. Right, so this is what I just wanted to show you guys, that how an open-ended divergence looks. You can go and watch the Thursday's video. You'll be able to spot it. You can also use the bar replay feature on your TradingView platforms, and you can go and see what exactly how the charts were on Thursday at after markets close, before Friday's chart had been printed on the screens. And then you can also see the change in the RSI, which is there. So, uh, yeah, I hope the point is clear. Now, coming back for Monday's trade, number one, first, we'll not be needing this. We don't need this. While I'm deleting the levels that we don't need, Monday is the expiry minus 1 day. So what I do is on expiry as well as expiry minus 1 day, I shift all my trading to the following week's expiry, right? I will not be trading in the 11th November expiry. I will be shifting it to the 18th November expiry. And that will be my suggestion to all my followers. You might be paying a slightly higher premium for your entries, but then you will be doing your capital a much needed favor. You will not be fighting the market a lot, and that is what I personally do, and I personally advise everybody. Rest, it's your trading, your capital, completely up to you. We don't even need this, right? We'll start with the weekly time frame first, right? So on a weekly time frame, after this, there's a very clear swing, right? If you observe, this is the clear swing low, this is the swing high. So in on a weekly time frame, we are still in a higher high, higher low formation. The low has not been breached, so the weekly bias is bullish. And because we have a clear swing and weekly levels are important, we'll quickly have a look at the weekly time frame levels as well. All right, we are at an important. So if you look at the levels on from which the market had seen some buying, I'll quickly once we zoom out to the lower time frame, this is the weekly time frame fib support. All right. On daily, so this is the trend line that I was talking about at the start of the video. This is the trend line which came in wherein we had broken out of this trend line, continued higher, formed a double top. The double top has reached its target. We have retested the trend line. We have seen some strong buying incoming from this particular trend line retest itself. So yeah, it is going to be a good, interesting week going ahead to see what the market is doing. And this was also a trend line retest. This was also the point 0.5 to 0.618 zone of the weekly time frame, weekly fib time frame. So yeah, overall things look good, right? So markets came down, markets took support from this particular level. Now, if we form a good double bottom on maybe a 75 or an hour time frame, it would be a good reversal trade, and we can look for and planning our long entries for a new all-time high. But then again, like I always say, do not predict anything, but be prepared for everything. And that will be our motto going ahead. And we'll keep the trade plan for Monday extremely simple. So this is the day high. Above the day high, we are looking for a long entry. I will also mark another fib level for marking out levels below which we can look or anticipate some weak movement. Right. So we'll discuss the opening scenarios as well, right? If we open flattish, we break out of above Friday's high with a pullback, we can look at a long entry. If we open with a gap down situation around these level, if we see some buying activity or positive price action, a base formation, we can look for a long entry. Below this, we can look for a, sorry, below this, we can look for a short trading till about day's low, or maybe we can again, like I told you guys, we can form a good double bottom around here on higher time frames as well. So we'll keep an eye out on that. We can expect some pullbacks and then the markets to continue higher. So with whatever it is, I'll keep you guys posted and we'll discuss in the next video as well. And we'll keep the trading to again uh, bare minimum right now, right? Reduce the quantities is what I would suggest. Let the markets give us a very good direction. So it is at a juncture where it can either continue the downward trend or maybe form a base and then reverse. So we have discussed what is looking like all the possible scenarios on the charts, right? On good time frames, right? On a weekly time frame, on a daily time frame. We have discussed it all. But then ultimately market will do its thing and we have to follow the cues and do whatever best is in our hand. And yeah, in this zone, mostly I will not be trying to trade. There is also a good trend line, which is if you look at this particular trend line. But then again, the trend line has already been broken, breached multiple times, not being respected very beautifully around the day's closing because of the volatility. So we'll keep our trading restricted to this particular setup, right? So that's it for today's analysis, guys. I hope this breakdown helps you plan your Monday trades with more clarity and confidence. Remember, it's not about catching every move, it's about catching the right one with the right mindset. If you found value in this video, don't forget to like, subscribe, and share it with your trader friends. Also, drop a comment below. Let me know how your Friday trades went and what your plan is for Monday. I always enjoy reading your thoughts and setups as well. I'll see you in the next one. Till then, trade safe and stay disciplined, guys. Cheers and thanks for tuning in.